Jory Desjardins. I'm another co-organizer.
So, quick question. Who's first Crypto Mondays? Raise your hand. Nice. This is awesome. How about returners? Yes, we want to, yeah. So thanks for coming. This is a panel that I'm really excited about. What I wanted to do was basically make it, what we wanted to do was build an open community for anyone who's interested in distributed technology or blockchain technology, no matter what your background. So yeah, enjoy. Just a quick housekeeping thing. Let's try to keep this space as clean as possible. Thank you Rocket Space for hosting. And we have a couple other sponsors as well. Some will talk. We have our first professional grade live stream service today. So BFast TV, thank you so much. And CryptoBlock is another sponsor as well. Basically, what I noticed was there's a lot of information out there. If you want like a quick 2-minute email 3 times a week about the blockchain space, those guys are the best way to do it. Get caught up with all the news. And they have some special promo for you guys. If you sign up this week with that URL, you're in the chance to get a Trezor 1 hardware wallet. And Marina.
Hi everyone, my name is Marina. I'm the CEO of BFast TV. We're live streaming this panel, this event tonight on our website. So we are a media video production house here based in San Francisco. We cover different type of events and conferences related to technology, innovation, as well as we, put your event or conference to the next level, to virtual next level, say, because we can help you to live stream your event, not so you can gather not only the audience offline, but also invite online audience to listen what your speakers and panelists got to say, so you can expand, your reach and get more leads, get more brand awareness, and bring more value to your speakers. So if you have any questions, if you're interested in our services, please go to bfast.tv and contact us. Thank you.
And last sponsor, Christian from Bit Inc. BTC Media, BTC Inc. Sorry.
How's it going, everyone? I'm from BTC Media. We are a 360 media company in the space. We operate BitcoinMagazine.com, Let's Talk Bitcoin Podcast Network, and the distributed event series. So we have a pretty big event coming up in San Francisco in 2 weeks, July 19th and 20th, which is next Thursday and Friday. If you haven't checked out the website yet, 2018distributed.com. It's looking to be one of the best events of the summer. So if you could scroll down, we made a very strong effort to really attract some of the best speakers and thought leaders in the space, and have a panel environment that's very educational. So you can probably see folks from Kraken, BitMEX, Coinbase, Civic, so Salesforce, IBM. We're going to have a lot of people from the space in the area attending the event. I'm doing partnerships and media, so I have a lot of interactions with companies in the area, and can confirm that there's going to be a really strong attendance from here as a core. We are also, lastly, kind of differentiating this by bringing in an element from Asia. We've partnered with Wancheng Group, which is one of the biggest investors in blockchain technology in China and Asia, and we have very strong attendance, as well as companies that are representing the space from that end of the world going to be at the event. So would love to have you guys there. We're raffling off 2 tickets today, so Andy kind of has the details on that. So one, we're just going to do based on the emails and the sign up in the back. And the second one is we're going to, for whoever follows both distributed ledger and crypto SF Crypto Mondays on Twitter. We will also be raffling off one ticket to them. Lastly, I'm selling tickets for 30% off at the event after the panel. So come see me if you're interested. Thank you.
All right, let's get this started. First, let's start off with maybe Brandon, if you want to come. So how we're going to do this, I think, is some people might not know what Fragments or Stably, what they're doing. So we'll have a quick introduction.
Hey, thanks. So my name is Brandon. I'm one of the co-founders of the Fragments project. Yeah, really excited to be here to be able to talk about what we're working on. So this is a panel ostensibly for stablecoins, but we, funnily enough, don't actually refer to ourselves as a stablecoin for a couple of reasons. We take a somewhat broader view of the ecosystem in the sense that we think we're in a pretty unique point in history where, for the first time in a long time, we can actually have competition between currencies. So now we're in a situation where you have the ability to choose amongst multiple different currencies you could use. Which one would you choose? You know, what makes one currency better than another currency? What is an ideal currency? What does that look like? So that's sort of the goal of the Fragments project. We're trying to create the ideal currency, and we often refer to ourselves as a low volatility currency because stability is a very important piece of the puzzle, but it's not the only piece. So I can talk a little bit about what we look at when we look at some of these stablecoin projects. There's a number of qualities that we think are really important. The first three are probably really already familiar to people in this room. These are the three defining qualities of what makes money. So the first one would be medium of exchange. This is something that is fungible, divisible, portable, or otherwise accessible. So something like a diamond, for example, would not be a very good medium of exchange because if you cut it in two, each half would be worth less than 50% of the original. The next quality would be unit of account. So this is the quality that a lot of stable currencies like zero in on. I think we all in our heads have a pretty good idea of how much a dollar will get you. So a dollar is a pretty good unit of account, at least in the short term. But there's really two pieces. One is short term, one is long term. Years from now, a dollar will not have the same unit of account as it does today. The third one is store of value. So store of value is something that is durable, something that is not likely to precipitously lose value at any point in the future. Bitcoin is a great store of value in the long term. In the short term, you get into a situation, and a lot of us have probably been here, where you buy in Bitcoin at a certain price and it goes down 20, 25%, and you're pretty much locked in. You don't want to spend at that point. So that's something that's a good store of value long term, not in the short term. The next quality we look at is government independence. This is what John Nash talked a lot about when he was talking about his ideal currency. This is probably the best contribution from the Bitcoin project. I don't say that lightly because I'm a computer scientist, but they created a new consensus algorithm, Nakamoto consensus, that was very important for distributed computing. But we're already seeing innovation that can go beyond that with various computing systems right now. And so we'll still talk about that in textbooks. I think down the line, the biggest contribution will be that Bitcoin proved that not only can we have a standalone currency, but it can also exist and get traction that it really has. And then the last one we look at is what we call global scalability. Not so much in the sense of system scalability, like Ethereum transactions per second, but what does it look like when the currency accomplishes its mission and gets to the global stage? Any currency that requires locking up lots of assets is something that does not scale very efficiently. So we're trying to attack each one of these qualities with the Fragments protocol. We are a semi-collateralized protocol that's decentralized. It splits on inflation. So a good part of what makes something a good store of value is by looking at where the senior goes. So in the Bitcoin situation, there's no explicit seniorage because there's effectively a fixed supply. But there is sort of implicitly because as the demand of the network goes up, the value of your tokens goes up. And so with Fragments, what we do is we sort of redistribute the tokens into the system, effectively shifting the volatility from unit value to unit count. So in the Bitcoin example, if you bought one Bitcoin that was worth $1 and then the value went up by 50%, you would have one Bitcoin worth $1.50. In the Fragments world, instead of one Fragments token worth $1.50, you would have 1.5 Fragments, each worth $1. So in that sense, we can get both the stored value context and we can maintain the unit value of Fragments. And then on the downside, when we need to contract the network, we have a bond auction, so we auction bonds. They can only be bought with fragment tokens that remove them from supply. And then we have a reserve that participates in the bond auction as a buyer of last resort. So that's the quick description of Fragments. If you go to our website, fragments.org, you can read a lot more information about it.
And Kory?
All right, how's everyone doing? All right, well, thank you so much, Andy, for having me here tonight, and Rocket Space and all the sponsor for hosting this stablecoin panel. My name's Kory. I'm the CEO and co-founder of Stably. We are a Canadian blockchain startup focusing on creating stablecoin for the moment and tokenizing real-life asset in the future. And my team and I are actually all based in Seattle. Our company is in Canada because we're tackling the Canadian market, and we're also going to tackle the US market as well. And you know, I actually really admire what Brandon is building. He's creating something that I would say, you know, in the future could potentially revolutionize the very way that we transact value and transfer money. But for the short term, you know, our company, what we're trying to achieve is something a lot more pragmatic and more consumer application focused, where, you know, we focus a lot more on organic stability. Organic stability to us is, you know, if you have a stable coin that is supposed to be pegged to $1, we believe that it should be backed by $1 in the most transparent way possible. As you may know right now, the stablecoin market is close to $3 billion, and over 94% of it is dominated by one single player, start with T. And so, you know, anyone with some sort of foresight could see that eventually, you know, that won't last forever. And as more and more stablecoin competitors come to the sector, I think, you know, we'll have a lot more market share spread out among different projects, and you know, we'll have a lot of different flavors from different end of the spectrum, from centralized stablecoins to decentralized stablecoins, and even hybrids. So yeah, I'm very excited to participate in this panel tonight to discuss more about the future of the sector and what the different approaches there are.
So without further ado, should we start the panel? And Phil?
Yeah, I'll briefly introduce myself. I work at Bitwise Asset Management, and we don't have a stable coin. We created the world's first cryptocurrency index fund that was open to investors in the US starting in November, and just last week we opened up our Cayman fund, which is open to investors all around the world. And while a stablecoin isn't relevant to the product that we offer, we often get questions from clients about what it might mean for the ecosystem. In the near term, maybe not so much. Going forward, it can mean a lot for crypto, and even further forward, maybe 10 to 20 years, it can mean a lot for the world as we think about and reimagine what money is and how people store and exchange value. So to kick off the discussion, I think it would be helpful to frame for the audience just why stablecoins are important. Why can't we just continue using dollars or euros or any other currency that's offered by a government?
Sure, I'll start. So I'm actually born and raised in Vietnam, and I came here when I was 12. I send money back home quite often for my relatives. Every time I send, it costs me about $6 for every $100 that I send via Western Union, even PayPal. And when I came back to Vietnam earlier in January, I saw a phenomenon that was so incredible. There was over-the-counter markets for Tether, for USDT tokens, and people were buying it and selling it, trading it in real life with each other using fiat Vietnamese money. And there was even a Facebook group for 80,000 members doing this actively. And the people who were doing this market making, essentially they were making profit from that. So that's their incentive to doing that. And so now I realized, hey, that's crazy. I can buy a USDT token in the United States and I can send it over to Vietnam almost instantly without almost no transaction fee. And my cousin or my relative in Vietnam could receive that and they could sell it to someone else in the market for actual Vietnamese money. And that right there just bypassed Western Union or PayPal, what regular banking system could achieve. So to me, that was the coolest thing that I ever saw. I mean, I could go on and on about more, but I like to have Brandon have a say as well.
Sure. So first, Kory, thanks for the kind words on the project. I really think there's a place for both of our projects in this ecosystem. I think we're both trying to solve slightly different but complementary needs. Like Stately project is solving like a real immediate need right now that people need for transactions. So yeah, in terms of like why do we need a stable coin? I think a lot of the promise of these distributed ledger technologies is that they can operate as programmable money. But a lot of the use cases about what you might do with programmable money only works if you have some stability. So for example, you have an escrow contract or a loan contract. I would never loan one Bitcoin to anyone to be paid back a year from now because no one knows how much that's going to be worth. Same with insurance, payments through time, so you never pay your rent that's denominated in any of these currencies. So I think it's just a necessary piece to unlock the actual promise of what these technologies can do.
Yeah, those are great answers, and those are thoughts that I have as well on the topic. What do you think are some of the most promising early adopter use cases for stablecoins? Do you think it's for countries like Venezuela that don't have their own feasible fiat currency, or do you think it's something else like online payments or gaming currency?
Sure. I think the most immediate use case is obviously trading. That was the very reason why Tether was created. The very first stablecoin was created in the first place. But beyond trading, I think the next most practical use case for stablecoins would be remittance, money transfer, payments. Next to that would be to power decentralized applications. So as you may know, decentralized application, they can't take fiat money. So they can only take cryptocurrency. If they take cryptocurrency or they hold cryptocurrency on hand, they're subjected to crypto volatility, and that creates a lot of problem when it comes to scaling and supply chain integration, so on and so forth. But if there is a stable coin, they could definitely integrate that into their system and get rid of all those problems. So I think in that sequence is how it will unfold.
Yeah, I agree. I think that's pretty accurate. I think the sort of first use case of any of these projects in the crypto ecosystem is investing. Right? So just about any project starts there. And then also, there's in crypto projects, there's a big split between what happens on-chain and what happens off-chain. It's not easy to get data from off-chain onto the chain, so it can be used by a lot of these smart contracts. And so having a stable coin that's on-chain gives you a native currency that can be used for all these applications.
Yeah.
In addition to just the normal use cases you use money for today.
Yeah, that's great. And then after meeting these early use cases for things that have clear and demonstrated needs, how do you think we get to mass adoption, to the point where people, as you mentioned, Brandon, think about competing currencies, where you take something like Fragments and you consider, would I rather have Fragments or would I rather have dollars or any other fiat currency?
So I think the first step of mass adoption of any of these currencies for normal use cases, like think buying your coffee in the morning, the first hurdle we have to get over is just the technical hurdles, just the scalability of these platforms. There's a lot of smart people working on this right now. in Ethereum, you can list off a number of projects. There's sharding, there's proof of stake, there's things like TrueBit that offloads computation. There's layer 2 solutions like payment networks. So I think that's something that we have to get over no matter what. Beyond that, I think a lot of it comes down to familiarity. There's a lot of actually already existing demand for people to use these things from the very early days. A lot of online shops accepted Bitcoin for a long time. Overstock.com, Microsoft did for a while, Steam. So I think people are interested in experimenting and using these things. It's just not easy to do yet. So Microsoft used to accept Bitcoin as payment through the system, but eventually they removed that option because they realized between the time when someone put something into their cart and then clicked checkout, they already had the wrong balance uploaded on the page. And so that's an easy situation where we should be able to do that, no problem.
Yeah, I agree with that. I think, for me, consumer-focused application is the best way to get stablecoin to gain mass adoption and to reach critical mass. Look at Bitcoin, right? Bitcoin has been around since 2008, right? And we all know what Bitcoin is. Everyone who's in crypto knows what Bitcoin is. But the amount of people who are actually using Bitcoin for daily transactions is, compared to Visa, MasterCard, or whatever, it's not very significant. And I think that, part of that reason is because it's very difficult to use Bitcoin in consumer application. It's very difficult for someone to buy a Bitcoin, to store it securely, to find merchants that accept it. So in order for any cryptocurrency, including a stablecoin, to gain mass adoption, I think you need to focus on consumer application first. How do you get someone to accept your coin, your cryptocurrency, or your stablecoin even, as a form of payment? And how do you get them to be willingly to accept it without even thinking twice, like questioning whether or not I should accept this? So.
Yeah, actually, I think again, add on to one of the points you made. I think usability is a big piece of this puzzle too. So a lot of people like the sort of trustworthiness of the rules of these systems, where you make a deal, you make a transaction, and it's final. Like there's no chargebacks or anything like that. But it's a double-edged sword. It's also really dangerous and really scary. Like if you manage your own wallet, if you lose your wallet, if your hard drive crashes and you don't have backups, if you forget your password, everything in that wallet is irrecoverable. There's no way to get that back. And so I think there's a lot of opportunity for someone to solve this problem of, sometimes people don't want to have their identity associated with some transaction. But sometimes you do, because that can give you things like access, perhaps, in some way to get access to what you may have lost.
And thinking forward in time, totally agree surrounding usability. If and when do you think governments would issue their own digital fiat currencies if they see that people have gravitated towards these cryptocurrencies that are independent from governments?
Yeah, so we've seen a lot of central banks from governments already talk about this possibility. And these are generally called central bank digital currencies. And so there's already sort of central bank digital currencies today. They're just not on a distributed ledger. They just sort of exist in computer systems. It's only accessible by other banks. So a central bank digital currency is a central bank natively offering a currency on one of these ledgers. And I think it's very likely that we'll see that at some point in the future. A lot of it comes down to regulation, and as you can imagine, a lot of countries are very risk averse. They want to know exactly what all the applications are going to be before they do something like that. But if they do, I think we'll very likely see different classes. You'll have your national sponsored digital currencies, and you'll have your independent digital currencies. And I think they'll both exist side by side.
Yes, I agree. I think in the future, we will definitely see central banks stepping in and providing government-backed national cryptocurrency. However, I think for a large nation, such as the United States, to pull off something like that, it's still several years down the road. For some nations like Malta, or Bermuda, or Singapore, right, it is much more feasible and practical for them to implement something like that. I think Canada tried to implement a national cryptocurrency system. Well, they tried research into it last year or 2 years ago, and it didn't work out, something like that. I mean, if the Federal Reserve wants to issue a Fed coin, right? They gotta look into how this going to affect inflation, right? Is this going to create a shock to the current economy? How are we going to make banks compliant? How do we prevent terrorist money laundering and all that sort of issue? So it's not an easy decision that can be made overnight. There's a lot of planning and thinking that needs to be put into this. And frankly, I don't think it's in the interest of the government right now to do it themselves. I think it's more in the interest of the government to let the private sector take care of this for now and see how it works out. If you go back to, take a page off the history book back in the 1800s, during what's called the free banking era, during the 1850s, 1860s, this is an era where, there wasn't really a central Federal Reserve. There wasn't really a central bank in the U.S. This is an era where you have local banks at different locations. They would issue their own banknotes, and these would function effectively as money. And you could take these banknotes to these individual banks, and you can redeem them for like gold or dollar, or sometimes they'll be backed by commodity or stocks or real estate, whatever. So this would be like an early day MakerDAO, basically. I think that's how it's going to unfold. The private sector is going to come in and take a first crack at it, and then once large national government like the U.S. thinks that is practical and it makes sense, it's more feasible for them to jump in now, I think that's when they'll do it. But I don't know if it makes sense for the United States to issue fiat cryptocurrency when the economy is just operating just fine. If I was the Federal Reserve, I would save that as like the last card to counter some sort of economic downturn or recession, for example. When they can't lower interest rate any longer and they can't print fiat any longer, perhaps then they could create a national crypto Fed coin, airdrop it into everybody's wallet, everyone's national wallet, right? And hopefully that could stir some sort of stimulus. I don't know. If I was the Fed, that's what I would do. I wouldn't waste my time creating a Fed coin right now.
I think that's accurate. The funny thing about the banknotes you mentioned is that so every bank you'd go to them, they'd have a big book behind their desk about to record all the exchange rates between their bank and other banks. And because traveling was so difficult back then, the further away you got from the bank, the worse exchange rate you got, because the harder it was to ultimately redeem to the actual owning bank.
So talking more about how the space will evolve, do you think that just one stable coin will emerge as the coin that people go to? Or do you think that there will be many different coins that have a role and succeed and flourish?
So I don't like to make predictions because I'm terrible at making predictions, but I think that in the long run, there could be several scenarios. I think the most likely scenario is we're going to see sort of adoption between centralized and decentralized stablecoins. As I've said earlier, I think it's not something, one doesn't have to replace the other. I think it's more apple and orange. It's more complementary product. So I think these two markets will grow and evolve side by side to fulfill different use cases and needs.
What would be the different use cases? Who would prefer centralized, who would prefer decentralized?
Well, think of I can't think off the top of my head, but for a business that needs a lot of financing or it cannot, just easily generate financing or like sell equity or whatever, right? It could utilize something like a decentralized stablecoin where it could, no collateralization is required, right? Or if they want to build something that is not affected by national government and fiat money and regular geopolitical uncertainties, then perhaps you could create a completely decentralized stablecoin that's not tied to any of that.
So to answer the question about whether there'll be one or multiple of these, I think one thing we've seen so far until now is that we've seen very few, if any, like large projects die because of competition. We have Bitcoin, we have Litecoin, we have Bitcoin Cash, Bitcoin Gold, Classic, Monero, Zcash. All these things who file coin storage are very similar to each other in a lot of ways. But over and over again, it seems like people want optionality. And so I think there's a lot of space for a long time for these projects to come into their own and sort of show what they can do. I think especially in the decentralized stablecoin context, there's not necessarily, I don't think, one perfect solution. Or maybe there is. Maybe someone will find it. But I don't think right now we know what that one personal perfect solution is. There's various different trade-offs that might better fit different scenarios. So maybe one is more collateralized than something else, and so there's a different risk profile. Maybe one has shareholders that get this information, one doesn't. I think there might be, for the immediate use case that you guys are solving, you're solving like a real need right now, especially on centralized exchanges. And so once projects like Stable exist on centralized exchanges, I think all these other stablecoin projects that come after, you're going to have a real story for why they need to exist. What's the value proposition, actually?
For something like Fragments that has a broader, longer-term vision, what is that mission for Fragments, for its reason to be?
Sort of what I talked about in the beginning. So we can take fiat and we can bring it onto the blockchain, but it doesn't necessarily mean that we've created better money. So I think we have the option to do something we haven't been able to do before. With these tools that we have, these systems, we have tools that we can use that central banks have not been able to. So we can, for example, helicopter money to wallets automatically. We can potentially measure things more precisely, operate faster, and be more stable than existing fiat currencies.
Great. And thinking further of the life cycle of a stablecoin is fantastic when it's pegged to one, but eventually sometimes pegs break. What are the peg breaking scenarios that keep you up at night or you think are legitimate risks to your stablecoin offering?
So our stablecoin has what's called organic stability. It's backed fully by a dollar in our reserve, meaning anytime that our stablecoin falls below $1, anyone in the market could go out and buy it from the market and redeem it with us and make that difference in profit. Enough people start doing that, the strength of the peg of our stablecoin is going to be more enforced. I think in a scenario that would definitely keep me up at night would be something like a major crypto market crash and everyone is scrambling to get into my stablecoin. They're willing to pay 2, 3, 4, 5, 10% premium just to get away from the chaos, right? So that is the type of scenario where it could turn out to be disastrous if there's not enough liquidity provider, there's not enough market maker to satisfy the demand. So as we build our stablecoin and build out not just the technology and the legal framework, we also have to create a partnership with market makers, liquidity providers that help come in and help strengthen our stablecoin.
Yeah, I think the peg breaking scenarios are different depending on what project you're looking at. So for example, for Stable use case, if they started trading for 75 cents on the dollar, then something has gone wrong, right? So if that were to happen, then that means that one of the fundamental promises that you make as an organization has been broken. Whereas some other projects that are not collateralized, they try to maintain price stability through a combination of different mechanisms like elastic supply, market making, that sort of thing. There might be much more room for deviation in the price, but it's still upholding all the promises that it came to the table with. And it's also interesting where I think we'll see potentially some systems too that maybe they don't start out as being very stable. Maybe they converge to stability as the use goes up. And so if it's not stable in the early days, it still could be very, very stable in the later days.
And also thinking about how the space evolves over the long run, do you think that stablecoins will compete with some of these other coins that are not pegged, like Bitcoin, that serve the function right now of things like remittance? Do you think that takes away or competes with some of the utility offered by current coins?
Bitcoin, it was designed it's called cryptocurrency. I mean, the only reason I don't have as many Bitcoin as I should have right now is because I was fooled as a currency. It really isn't, whoever used Bitcoin to buy pizza or, whatever 2 or 3 years ago would have really regretted that, including me. So, to call Bitcoin a currency is very misleading, in my opinion. A currency needs to be stable. And stability here at the current moment is almost synonymous with the US dollar. It's the most widely accepted currency in the world. It is the most demanded, accepted. Oil has to be traded in US dollar. So that's really hard for something that is completely decentralized or uncollateralized cheap in the short run?
Yeah, so I think Bitcoin set out to create a currency, and it didn't turn out to be that way in practice. It really turned into a form of digital gold, right? And so it's great for parking money into for a while, and then eventually you might take it out when you want to spend it. But it's not good as a day-to-day currency. Yeah, so if you had a version of Bitcoin, but it was also unit stable, then that's just de facto better than what Bitcoin is. I think Bitcoin will be around for a long time because of its advantage as name recognition. Everyone knows what it is. Everyone knows how it operates. It's had some troubles in terms of governance, but it's also kept it from changing too much, and so it's very predictable. So I think it'll be around, but it won't be used for remittance or payments from here out.
And for stablecoins in general as a class, how do you think about features like preserving the privacy of transactions? Is that something that you would actively seek out to implement as part of a stablecoin, or avoid to hopefully have better initial adoption and not be seen so negatively by governments?
So we are regulated by the government, and we follow the rules, so we sleep well at night. So to your question, if privacy is a feature that we can offer and that still help us stay compliant and legally law-abiding, then yes, that is something that I would definitely look into offering. But as you may know, it's very difficult to have something like that. So we could definitely partner with other blockchain projects, such as Zencash, for example. Rob Leone from Zencash, a good buddy of mine. If we wanted to, we could partner up with them and create a stable coin that has some sort of privacy feature like a Zencash coin, but that's if we decide to do that. So in order for that to happen, we got to see how regulation unfolds, what the government's saying, and what money transmission law, how it evolves over time.
Yeah, so the Fragments, I would say that we're privacy agnostic. It's not really the problem that we're trying to solve. There's some currencies out there that are focused entirely on privacy. I think that's an interesting space to explore, but it's not really our main focus. I think we're also concerned with how we're perceived by other governments around the world. And so if there was a demand from the users and the population for these privacy features, and if it was also conzoned by these governments, we would be happy to work with that type of system. But I think right now we're focused so much on solving the stability problem, we're going to leave the privacy problem to others to solve. And then maybe at some point we'll see the two worlds connect. But it's not something we're especially rushing to do right now.
And the last two questions, first on the near term and then on the long term. For the near term, what does go-to-market look like for a stablecoin project? It's almost weird to think about something like that for money, but it ends up being important to get people using it and adopting the currency. What does go-to-market look like for each project?
Yeah, so for us, going to market is quite simple. Okay. Going to market is quite simple. You get regulated by the government, then you have your smart contract set up, you have your banking relationship, your custodian set up, who will do all the money service business activity, KYC, AML for you, and get listed on exchange, get some liquidity provider, market makers to partner up with you to help you peg your coin to $1, and launch. So for us, it's pretty straightforward. It's similar to how one of our competitors, TrueUSD, went to market in February this year.
So what does that look like? Does that look like partnering with exchanges to fix trading initially and be attractive in that way?
Yeah, so we could partner up with exchanges and have the liquidity providers be there ready to make the markets when trading finally start open for that pair. And as far as exchanges go, for example, we'll release more information in the future about what exchanges and what banks we're working with right now. But what could happen is we would get listed a pair against Bitcoin, so it would be stable USD, which is our stable coin. It'll be stable USD versus Bitcoin, and there would also likely be another pair versus Tether.
Yeah, I think the mechanics of going to market are almost like a well-oiled machine at this point. I'm sure you get the same emails that we do every day. We get 3 or 4 inbound requests from people offering ICO services. I'm sure you've all seen these websites with big countdown timers and the flashy videos, offering this or that. So I think that is pretty well understood. Beyond that, I think for projects like ours, or projects that have multiple mechanisms in place, a lot of these mechanisms haven't really been tested yet. And so you're seeing this especially in the distributed governance areas, where you'll read a lot of white papers out there that say, okay, we're going to implement voting. It's going to be state-based voting or vouching-based voting, and then it's going to be combined with this centralized court system, and it's going to have this and that. It's sort of like this big pile of cards, adding all these pieces that have never actually been tested in isolation before. And so for some of these projects, you might see tests of individual parts to prove that. That's one go-to-market strategy you can mention.
Great. And longer term thinking, 20 years in the future, 50 years in the future, when Bitcoin had started out, at least the language in the Bitcoin white paper, it was almost far more aspirational about what it could be and what it would allow people to do in exchanging value peer-to-peer and almost completely subverting governments. What do you think the world looks like in 20 or 50 years if stablecoins take off and people have competitive alternatives for money?
So I think at some point in the future, we're going to see something along the line of stablecoin ETF or ETF token. Something that is basically a basket that contains all the other stablecoins. To me, that's what an ultimate stablecoin would be. I think that will emerge at some point in the future, and whether or not Bitcoin is still relevant by then is unknown. But I think.
Could you talk more about why would the ETF approach be desirable?
Yeah, I think stability could be best be, in my personal opinion, I think stability could best be achieved through diversification. Obviously, there's a lot of approaches to creating stablecoin, from organic stability, being centralized like us, to being decentralized and backed by digital assets like Maker, to something that's completely uncollateralized like Fragments or Basis. It's too early right now, right, to really tell which one is really going to work out or survive in the long run. But I think that as more and more people start working on these technology and start improving them, adding more features onto them, and making better and better version of them, they'll start getting better. The stability will become more stable, and it might just be that in the future the most stable stablecoin that you can have is something that is a basket that has all the other ones in it.
Yeah, so there is some precedent for what you're talking about in the existing fiat world right now. So the IMF has this thing called the SDR, which is a basket of international currencies. And so some people like the idea of having this be the global reserve currency. So we could see something similar in the crypto space. In terms of what it looks like 20 or 50 years from now, it's really hard to say. I think one thing we learned this year in particular is, 2017 was the year of big aspirations. 2018 is turning into the year of people realizing that, oh wait, we actually have to build all this stuff, and it actually has to work. And they're realizing how difficult a lot of this stuff is. When you read some of these roadmaps, you're seeing dates go out into 2020, 2021 already. So I think you'll start to see some of the timelines get longer just in terms of development. But 20, 50 years from now, I think it will be commonplace to transact with these for normal transactions.
Great. And with the remainder of the time, I'd love to open it up to Q&A from the audience.
I have a question about how Fragment works.
Hi. I was reading a Medium post that your team published a couple of months ago, and it talked about how the adjustment of ratios occurred when you decided to split the currency. And I was curious about, would an Oracle service constantly check for the price information, change those values, or would that be something that you would do manually, or would it be time constrained? Let's say you only update the ratios every 10 minutes, every 10 days, every X amount of time, or would it be like a predictable event every 6 hours or so?
Yeah, great question. So a great way of getting, so it's hard to get data onto the blockchain, but it's fairly easy to get data on the blockchain to get off. So in the operation of our monetary policy code, whenever we enact an operation, we log the action that we're performing. So if we do what we call a rebase operations, when we change the relative value of the coins in circulation, we log that change to the Ethereum event log. And so exchanges can listen to this event log and then make the appropriate updates that they need to for their internal systems. So everyone understands what the question was about. Centralized exchanges are kind of an interesting construct in this ecosystem because when you own, for example, Bitcoins and it's on a centralized exchange, your balance doesn't exist on the blockchain itself for the most part. So user funds are pooled together and then they do their own accounting in their own off-chain systems. And so if we change the relative worth of the coins in our system, that has to be replicated somehow in this off-chain environment.
So that means that exchanges would have to.
So that means that for an exchange to support Fragment, they would have to listen to these events on the Ethereum event log when it happened and then try to act upon it.
Yeah, so it does require a small amount of integration work for the balance updates to be reflected in centralized exchanges. There is precedent for this already. In systems like Neo, they have Neo Gas. And as we've seen, the exchanges that did implement these updates saw a massive influx of users because it's a real competitive advantage. And so if you're an exchange and you're not updating your user balances to reflect what's on the chain, you're going to be at a severe, you're going to have a lot of people asking for that and almost demanding to see their true balances as they do this.
And on decentralized exchanges then, where the order actually gets placed on chain and there's a lag, let's say that I want to sell some fragments I have and I put the order for 100 fragments and it's set on the chain, and then within that minute from when my transaction gets mined or someone closes that order, then it changes and now I have 200, but then someone bought 100 for the previous price. Is that like a detriment for on-chain transactions on decentralized protocols?
So the transactions, so the orders are denominated in terms of fragments. So one question we often get is how often these rebase operations happen. And we explicitly don't have them happen very often, once every 24 hours or so. And so it's a very predictable type of event. But even if it does happen to fall within the time span in which you're putting an order in place, it's still denominated the same way. You're still putting in an order to buy or sell 10 fragments, for example. And so that won't change.
I appreciate you looking at it as disruptors should look like, but as a guy who worked with the Fed, until somebody offers a more compelling investment offering or security offering, that's why no government, including China, is ever gonna fucking win with a coin. Get that shit the fuck out of here, because that's why we do coins. We've got to figure out how we can offer the derivatives people and the others who invest in this space for real money that they live and die on a better option. And you may do that, that's a real point. That's opposite to ETFs, but we got to figure out how they can buy the risk upside, just like insurance companies are selling the risk upside to banks right now on these Kaizens and other things. If you can offer something like that, people will take the risk of a coin, they'll take the risk of the timeline of variable clearing, they'll take the risk of the actual legal jurisdiction, they'll do all of that. And I think like Appra's plowed the road a little bit with this raid, with what they've done using investment markets as a way to transfer money. But we've got to offer something that people are going to take the risk of this nascent industry and then help us build something that's stable, that people can depend on. And that's the real question. And it's not just one company part of another. That's the same level of thinking is a problem we have now. You've got to figure out how to make a better system first, ecosystem, marketplace. Then your platform gets to win if you offer that. So how are you guys going to do that? How are you literally, besides party going through, build an ecosystem that's dependable and we can have dependability for investment, because otherwise it's never going to happen. You can keep, you can raise money and I fund people, but guess what? You can sell it to some investors, you can't sell it to the markets. I'm asking, how are you going to build this ecosystem that's stable enough and dependable enough, offers enough value for us to take the risk of building a nascent, scaling nascent market?
Yeah, I think I get your sentiment. And it's a great question. I think ultimately for any of these projects, the proof is in the pudding, right? It's what you do. So ultimately, we're not here just philosophizing, right? We're here trying to solve real problems and build real systems for real people all around the world. And you know that requires building something that works the way it is described. And so some of these will succeed, some of them will fail. I think that will be shown in the marketplace. But you know, success comes through time. Also, you know, the system that exists for, I mean, a book that's in print right now for 100 years is likely to stay in print for another 100 years. Right now, we haven't had the track record yet to have a system that's existed for that long. And so that, I think, just has to come through time and through proving and practice. Is there anything else that isn't captured by the question?
Yeah, because I'll be frank, a lot of company product service platform offerings in this space, it's very awash if somebody offers a system of platform, ecosystem level football. Because that's the level in which you invest in this. I say this because my first angel group was our founders won not because they had higher share, they had IPO, it's because UBS came in at a system level and said, we're going to let you keep your shares. We're going to give you money to make hits and misses, because we need you to not sell the shares. And the founders there actually won because, not they were better than other founders, they had a system level advantage. I don't see that yet in the way it's being talked about. And it's a hot space. You guys are doing some really important work in this space. But what's the systemic, like, protocol, like blockchain level system that anyone can plug into this that someone's working on? Because that's who's going to. Like one little company, what's going to happen is one of you guys will shit them over money from the Morgan Stanley guys, or the other guys will deal with all of it. And then the other ones will get paid. And then somebody will try to ring the game, like the Ethereum guys try to do the bank facility. And they'll get fucked over too because some crazy little hedge fund is going to offer a better offering to investors around the world, and they can go get addicted. And the reason I'm saying that is, if you're going to build real shit that changes the world, don't do it at the product level. So there's not a protocol that you do bank to bank, invest a couple, you're fucking blowing smoke up people's ass with level.
Sure. So I think one thing we haven't really talked about yet is governance. And this may answer your question. If it doesn't, then let's talk afterwards.
Yeah.
But I think governance is also a really important piece of the puzzle and also very, very difficult. So one of the ways we can mitigate the situation that you talked about is to actually remove ourselves from the critical loop of the system, right? So if we have a system that's totally decentralized, it's governed by the users, we're not required to make any function call or make any functions execute. That's the ultimate goal. We hear a whole lot about distributed governance and Fragments as well. It's our plan. We have a lot more to talk about this that hasn't been published yet. But we have something coming along the lines that I'd love to get your take on. Yeah, I mean, the ultimate goal is to not have us be required. We could all, be hit by a bus, and the system could continue to operate according to the same principles that it was brought to the world with. But distributed governance is also very, very difficult, and so I think you can't expect any system to launch with full decentralization because that just adds too much risk. Like no one has implemented, full voting rights. Nothing has been totally decentralized yet. I think collectively, as an ecosystem, we're all trying to figure this out right now.
Could you talk a little bit more about coins that are not asset-based, that are collateralized coins, and what if people get spooked and decide the value starts, there's no real monetary policy that you can do like the Fed does. How do you keep from entering a death spiral? So if you're a company looking at one of these stable coins, that's one of those fears that would keep you up at night. Obviously in your case, it's collateralized with USD, so I can understand that, but
Just sleep there at night.
well, that's true. But if you could talk a little bit more about the downside risk and how you see a stable coin staying stable over the long term versus fiat.
Sure. So for our type of stablecoin, the centralized organic ones, that type of scenario is less of a problem. Just history has shown that having organic stability with centralization and actual reserve banking, that is by evidence, the most robust and stable method right now in existence. Other methods that try to achieve stability, like you said, it could definitely enter a death spiral, and it all depends on the mechanism of the system to prevent that. There's actually been, I think, one project that I won't mention its name, that is a decentralized stablecoin, but has recently broken its peg. It's actually broken its peg many times, and it finally just, I think it's dead now. I think it's trading at 30-something cents the last time I checked, and basically they can't burn any more of the token supply in order to bring the price back up to $1. So I don't know what's going to unfold with that project, but that's one of the challenges in the future that a lot of projects will have to face.
Yeah, so your question reminds me a lot of the conversations in the very early days of Bitcoin. I remember talking to a lot of close friends and family about this new thing called Bitcoin. It seems like it's just made up. Why is it worth anything at all, right? So I think that's a question that you could ask about any project, and I think it's been proven that there is real utility to systems like this. So I guess that's one part, but it doesn't mean that every system is sustainable, right? Some systems, maybe the incentives of individual actors aren't aligned with the health of the network, right? That's something you want to pay really close attention to. So for example, where does the seniorage go? Does it go to a central entity, or does it go to a small group of shareholders? What are the incentives of those shareholders? Like, what happens if they don't fulfill their duty of returning those back into the market? What's the accountability there? How do the systems try to cope when demand goes down? And so, in general, the world economies grow, but they don't grow continuously. They do go down sometimes. So I think some of the mechanisms you see in these totally non-collateralized systems do set up situations of death spirals, just like what you talked about. So that's one reason why I'm really not a big fan of invoking fees on top of the system, because if the system is starting to contract, and you handle that by adding even more friction onto the system, then you're just asking for more people to remove their funds from the system. And so everyone in this room, if one system doesn't work, you'll just take your funds and go to something else, right? And so you can't give any more reasons or opportunities for people to do that than necessary. So beyond that, I think you have to look at all the various details of all these different systems. So there's one big split between stable currencies, between the fully collateralized systems like Stably and systems like ours. I think there's a lot more homogeneity on the fiat-backed currencies than on the other side. And there's a lot more diversity, and to really tell one project from another, you have to get pretty deep into the weeds of the details and actually look at what's going on and make it on a case-by-case basis.
I might add to that as well. It might seem a little bit unintuitive, but I've actually talked to a lot of other, a handful of other decentralized stablecoin projects that use digital assets as collateral, and believe it or not, they're actually open to the idea of initially backing using our stablecoin, which is the ERC20 token, as the collateral for their digital asset. Maybe not the whole entire collateral, but a large portion of it. So there would still, it would have a portion of it that has organic stability, and then the rest is just whatever else.
Yeah, I would love for you guys to succeed because we want to use you as collateral.
There's another one.
Hi there. Can I just ask a question, just stepping back? Can each of you comment, and Phil, including you, on the most difficult regulatory question for you to answer right now? And why?
I think the biggest regulatory questions aren't up to us to answer. It's up to the regulatory agencies. We can give our best guidance, like issue. Oh, the issues that come up the most often.
No answer.
Oh. I think one question that everyone always asks is, are you a security or not? That's something that there still isn't really good guidance on. And it's changing on an off-by-month basis. And so, the environment in which you're developing your system might be very different from the environment in which you launch.
I was just surprised, one of you mentioned that it's pretty much
that all the players are in place, and it's pretty much, it's a fairly straightforward process in terms of, raising money, and I just thought, I was surprised by that because of the question of whether or not you're security.
What you see a lot of projects doing is any environment where the regulation isn't very clear, they'll just avoid. And so that means that they don't, they're not able to offer their product to everyone around the world. But we're not to that point yet, so we don't know what we're going to do. But a lot of people have decided that a lot of these the sticky issues, they're just not even going to address because no one can really tell them what the right answer is.
So I would agree with Brandon that the question that I get most often is, are they securities? What will they be labeled? And I was at the event a few weeks ago where the SEC Director of Corporate Finance spoke about Ethereum not being a security, which was fascinating. And people can have differing opinions on that, but that was the statement, that's how the SEC will view it. And it was a landmark event because he had said that it's possible for a project to transition from being a security to not being a security, which is not something the SEC has said before. And another key tenet of the guidance that he gave going forward that might be relevant to stablecoins is that they're really looking for evidence of projects being used for end user utility versus speculation. And likely, again, who knows, but you would think that a stablecoin that's meant to have a fixed price wouldn't be liable to the same activity and might be viewed more favorably in that way.
Is that not a question as like the progress, like there's more speculative use at the beginning than there is later on, right? So is that kind of what you think he's getting at? Like there's a lot more speculation in Bitcoin now than 20 years from now when it's doing whatever we all think it's going to do. So do you think that's a timeline graduation and the SEC comes along, or is it something?
Maybe.
No, you don't work for the SEC.
I do not, yeah. I do not work for the SEC, and I'm also not a lawyer, but it is very much to be seen. It seems like people have been waiting for more specific guidance from the SEC, and no other comments besides Bitcoin is not a security, we don't see Ethereum as a security, and then the introduction of the idea that something could be a security and then not a security. But other than that, it's to be seen if they'll treat the way that people use it. As you mentioned, if people happen to, like maybe Bitcoin itself stabilizes and people just use it and don't speculate. So it's to be seen what they'll really weigh for their decision, because they didn't give any clear criteria, just things that might be relevant.
So I might add a little bit to that. So since we're talking about stablecoins, we need to make a little bit of a distinction. So there's the stablecoin, right? By the way, disclaimer, I'm not a lawyer, I'm not a tax accountant, legal advisor, none of that. So this is just my own opinion. But a stablecoin by design is not supposed to increase, appreciate in value. So inherently, there should not be any expectation of profit, especially if that stablecoin is redeemable for $1 US or fiat directly, right? What we are seeing more and more is stablecoins that have a dual token system or a triple token system. Now, the stablecoin in those system itself might not be considered a security, but the other tokens, the other instruments in that ecosystem, for example, Maker, right? Maker has the DAI, D-A-I, which is the actual stablecoin, but it has the MakerDAO, which is the governance token, and that one, it fluctuates in value up and down just like a stock. So you could argue that that is more similar to a security than a stablecoin. But for our company, fortunately, we have a little bit of a precedent in this sector now. We have Tether, who has been out. There's TrueUSD doing this. Now there's us and several other players in the space as well, like Circle, Goldman Sachs is coming out now with USDC. There's even CKUSD up in British Columbia. You guys probably didn't notice that, huh? Daily volume is about 70, 80 million. I think most of it is probably just, I think it's because of fee-free exchange, so it's back and forth. But, there's actually already precedent for our type of stablecoin. They're already regulated by as money service businesses under FinCEN, FinTrack as a centralized convertible virtual currency. So for us, the legal question is a little bit better, less cloudy, and more precedent for us to base upon.
That actually, I was just going to follow on with that. If it's not a security and it's a utility, and institutions and businesses want to transact using them, at some point, if you're going to convert to fiat, you have to be a money transmitter and subject yourself to registering in 48 states in every country that you want to transact with as a money transmitter.
Correct.
Why, and my company, we're grappling with, do we want to do that or not? And if we don't want to do that, how do we avoid it when people that we do business with actually at some point want real money or physical money?
So you're working on the centralized stablecoin project as well?
So, correct.
Okay.
Yes. And
We can talk after.
yeah, but I think that's ultimately, it becomes a big issue, is if it's not a security, how is it going to truly get institutionalized if you have to be an MSB at some level, at some point, or you're going to have to do what we ultimately don't want to do, which is go to a physical financial institution.
So let's step back a little bit and make a couple of distinctions. Again, I'm not a lawyer, but I do work with pretty good lawyers. They have told me that for a person transmitting virtual currency to be considered an MSB, that transaction must not be personal use. Like if I would just transmit Bitcoin to my Coinbase exchange so I can sell whatever, I'm not a money transmitter. I'm not soliciting business. I'm not selling for someone else, right? So there's the first distinction. The second one is the issuer of the stablecoin, as long as that entity is not the one that is doing the transmission of the money or handling the money face-to-face with the client, meaning the entity that is supposed to do the KYC AML, as long as we're not them, that entity, that we have like a partner or someone else to do that for us, and we're saying in the US, it's unlikely for us, unneeded for us to register as MSB in all 48 states. Now, in Canada, which is also a market that we are expanding our operation in, that's actually where we started originally, we are pursuing our path to become a registered money service business in Canada, FYI, just because it's cheaper in Canada. And so in Canada, we will be, instead of using a bank or a partner to help take care of that process, we'll be doing that ourselves.
But that's what, at the beginning you talked about it costs $6 to get US dollars from another currency.
Right.
Ultimately, if we want to comply everywhere, you're going to be layering in all of these costs to outsource KYC, AML, all of these different elements, so that while the transaction itself costs millicents, the ultimate cost of the transaction starts rising as you introduce other players into this, which is why ACH got all screwed up to begin with. So, that's what, I'm just saying this is what we're grappling with right now, is it just seems to maybe not be worth it.
I think as more and more stablecoin competitor come into this market, particularly our type, I think competition is actually going to make pricing greater for everyone. Prime example for us right now, we're not going to charge any fees to issue or redeem our stablecoin, right? So our competitors are actually doing that right now. This is something that we're not doing, right? So we're following more of a Robinhood model where no fees, no commission, none of that. If there's bank wire fees and things like that, that's third party and not ours, then we can't really just eat that. We're gonna run out of money. We did that. So that we still have to pass on to the consumer, unfortunately. But as far as us ourselves charging a fee for that transaction, there's none of that. Just for the pure simple fact that if we were to charge a fee, someone else could go out and not charge a fee and be better than us. So it already got to that point in terms of competition. So. Besides the infrastructure cost of banking and wire fees, I don't think, from the actual company that's issuing these stablecoins, I don't think there's going to be much of a problem.
All right, it's going to be the last two questions.
Okay, awesome. Great panel, guys. This one's more focused for Brandon. So I think one of the larger, long-term assumptions with stablecoins in general is that something with a big supply like Bitcoin can't eventually be stable, and that it will always be too volatile to use as a dependable currency. What makes you think that something that, if the S-curve looks like that, something like Bitcoin can't get to the point where it's stable enough where people trust it as a unit of account? You need something that is actually like programmatically designed to stay stable.
Right. Yeah, so I think a lot of people might have the opinion that something like Bitcoin will become stable with enough traction. But let me turn that question around just a little bit. How much traction will be necessary? We've gone through many different growth cycles from the very, very early days to now when we're seeing, I don't even know what the daily volume is of Bitcoin trades. But we still haven't seen stability. And even if you did have the supply of Bitcoin perfectly match the steady state equilibrium of an economy, the velocity of transactions within that economy is not constant, right? And so just because there's variation in the kinds of activity you see within an economy, you're also going to need to see some sort of equivalent accommodation within the currency itself to go with.
So is that assuming that you have to keep it exactly stable, the buying power exactly stable, or is that there's a acceptable fluctuation? Because right now there's an acceptable fluctuation around, something, depreciating.
So Bitcoin, if you imagine it, if you're a Bitcoin maximalist and you envision it underpinning the entire global economy, say the economy grows at 3% per year, but the number of Bitcoin circulation stays stable. That's a deflationary currency. So it means that the value of the individual currency is only going to rise. And when the values of Bitcoin is only going to go up, what do you expect people to do with it? They're going to buy it and they're going to hold it until they decide that they don't want to hold it anymore. Right? They're going to try to offload it before the next guy does. Right? And so you can see how all these incentives come together to create these massive price fluctuations that we've seen many times, but up until now, I think we'll continue to see going forward.
Hi. So I was wondering how you guys make money or what your revenue model is, seeing as a lot of companies can raise through their coins appreciating, but that's the opposite approach you're taking.
So when the network needs to increase the number of coins in circulation, the new coins that get minted get allocated into a couple different spots. So for our system, first, if there are any outstanding bonds, we pay out the holders of the bonds. After that, some allocation is given to the reserve to keep the reserve topped up to where it needs to be to support the network size. A small allocation goes to our foundation to continue to support ongoing development. And then the rest gets distributed out to sustain holders.
Okay, so revenue channels, I think I'm only going to talk about two. I don't want to give away too much secret sauce. But we hold a reserve to back up our stablecoin. That reserve earns float income. So what float income is interest that generated by the reserve. If it was just an overnight cash account, then you might be earning 1%, 1.4% or something. If you wanted to invest in money market securities, which is typically short-term treasury bonds, 4-week T-bills or something like that, you might be able to get 1.7, 1.6% out of it on an annualized basis. And interest rates are going up as well, as everyone may have noticed. So that is primarily our main income channel, similar to PayPal, to Venmo, to Robinhood. A second revenue channel for us would be asset token issue and redemption fee. Now, for the stablecoin, we don't charge any fees, but the stablecoin is just phase one of our development process. We're actually building an asset tokenization platform that involves an engine that lets you tokenize the content within your own retail brokerage account. Like I'm talking your Interact Broker or TradeStation or E-Trade account. We actually have the technology prototype right now to actually tokenize the asset in that account and actually lock the content of that account so you can't transfer, sell, or trade it anymore. And then the token itself would then be an asset token. So for that technology, when it's fully developed and we have a compliance framework to make it regulatorily compliant, we can start charging issuing or redemption fees for these type of asset tokens. Another potential fee channel could be payments, right? If we were to set up payment terminals at, I'm from Seattle, we have a bunch of POS stores over there. There's a really cool company in Seattle called POS a bit. And what it does is pot store, they can't take credit cards, they can't have bank account. So what POS a bit does is you swipe your credit or debit card on that iPad terminal at the store, and then what it does is it buys a Bitcoin, and then it sends the Bitcoins to the pot store's account or wallet somewhere, and then they could choose to liquidate it for cash, or they could just keep it. Right, so that sort of bypassed the conventional banking system for these stores. For us, a stable coin obviously is a lot more suitable for payment instead of Bitcoin. So for these kind of transactions, we could choose to charge some sort of minimal fees. Perhaps not transaction-based, perhaps it could be just to set up the terminal or something like that, or train the personnel on how to use it, because in actuality, to use the system itself, it doesn't really cost anything because it's all blockchain-based.
All right, guys, thank you very much. Let's give these guys a big hand for an amazing panel. Thank you for coming to Crypto Monday. So a couple things. I just want to thank all you guys for doing a great job and the awesome content. As you can see here, this is being live streamed right now by our friends over there at BFast TV. I'm Marina. Hi, Chris. And the good news is the URL, which we tweeted, and we will email all of you tomorrow, is also archived. So you can put it on your website, share it with all your friends, tweet it out. So it's great, and I was watching the quality over there. It looks really awesome. A hell of a lot better than when I live streamed it from my phone a couple of events ago. So thanks so much for doing that for us. Then huge thanks to Andy Chang, our organizer from tonight, for making all this happen, putting it all together. And I want to recognize my two other organizers, Yulia, who had to take off early because she's going to Europe, and Jory over here, who has an exciting event coming up soon. And my name is Mark. So the four of us put together Crypto Mondays with the purpose of building community, making it accessible, and not trying to super geekify shit. So everyone is welcome to come, learn, meet new people. And we have a hard stop at 8 o'clock with Rocket Space, so I'd invite you all to hang out. There's plenty of wine. The keg is open over there. Schmooze, talk to each other. If you guys want to hang around, talk, I appreciate that. Two more quick announcements. We handed out these things that are evaluations, and we're very grateful for doing it the old-fashioned way, filling that in. And if you see at the very bottom, it says enter to win a raffle to Distributed 18. So one of our sponsors is Distributed Ledger. Thank you very much. Or Dist Ledger, at Dist Ledger. And they're coming up with a really cool event next week, Distributed, here in San Francisco. So everyone who fills this in and puts in an email address is entered to win a free ticket. And then we're giving away another free ticket to people who follow SF Crypto Mondays and at Dist Ledger. Dist Ledger and at SF Crypto Mondays. So whoever follows both those places is also entered. So we're going to be giving away 2 tickets, and we're going to let you all know soon. As well, our sponsor from our last event, Primus, has these really cool t-shirts in really cool nice bags in the back. So early bird gets the word. So I just want to ask you if you guys have one of these, if you could either leave it in the back. The reason we ask you to fill it out is to help us do better stuff. And if any of you guys have suggestions or people you'd like to speak or ideas, come speak with me or Andy or Jory. We'd love your feedback, or email us or tweet us, because we do this for all you guys to build a community. It's kind of nonprofit, it's for fun. And then 2 weeks from tonight, we're going to be back again at Rocket Space with another really great content thing. We got a couple of things in the air. We don't yet have it nailed down which one's going to be, but follow us on our Meetup channel. And then as usual, you just go grab your tickets at Eventbrite. So thank you all for coming. Again, leave these in the back or hand it to one of us. And thank you guys, and have a good rest of your evening. Cheers.
Thank you.